All right, so let's get to the sector spotlight because tech was really sleeping but kind of woke up markets last week and really led the Dow, S&P, and NASDAQ all higher here. So we had Apple up, almost 6% last week, IBM up about 2%, Intel up 9%. What do you do with this sector right now?
Well, what I like to see after earnings, I like to see a gap go up and hold. Remember we talked about, I know it's different, Bed Bath & Beyond. We talked about that big gap and how to buy it. I want to show that chart real quickly because I think it's important. You take a look here. This was the big earnings gap, little consolidation, and then it went again. I'm looking for the same type of move in some of these big cap techs. I want to start with Apple. Apple, I nibbled a little bit after the earnings. This was your trade. This was your day trade as it went through the 326, came back above. This was your 3-day move into earnings, and now here you go, gapping above this downtrend. So as long as Apple holds above 345-ish and goes sideways, I think you can continue to watch it and then add to that trade once it goes above Friday's high of about 355.
Now, does it matter that you kind of missed that big gap up? Is that kind of a bummer for an investor or a trader, or is it okay?
It's a little bit of a bummer, but if Apple's going to go to 400 or 420 this year, missing $8 and not taking that risk into earnings is fine. Now, also last week we saw BMW. The cloud computing group woke up. Thank goodness, because it creates more vehicles for us to trade. Same strategy here. BMW, big gap up, holding, going sideways like that Bed Bath & Beyond chart. I think you buy BMW when it starts to break above about 98, 99 for a move well north of 100.
So with all these stocks, you're not ready to really get in there yet. You have to wait a little while.
Well, now is when you dip.
Okay.
Now is when you buy a little bit. You get your tier 1, and then when it starts to get up and go, that's when you add above these recent consolidations. Same thing with IBM. IBM was actually down on numbers because they said it wasn't enough for that day, but the chart was strong, the trend was strong.
And it ended up for the week anyway, so.
Yeah, and it still went up, and it still looks like it has higher prices. This too, a little bit of an inverted head and shoulders pattern where this measured move could probably take you to at least 175 to 180 on IBM. And lastly, Intel. I know it's slow, but that stock was pretty impressive. That stock gapped up. People were a little, weary going into it. They proved that the PC market's not dead. I think you could still buy Intel, and we're going to see a little bit higher prices. You take a quick look at this chart. What I like is that it gapped up, and again, didn't fill any part of this gap. So to me, this looks like it can go back to 22, 23. So I would stay with this Intel trade, or not even get enamored with it, but buy some, hold it. It could be one of your many positions, just not your main focus. And now we have